Hi, welcome to the market alert for Tuesday, the 1st of September 2020. So, stocks and silver soar for fifth straight month as bond and dollar dumped over the last month as well. So yeah, as it says there, easy street, just keep moving stocks up. Silver, it was the most undervalued asset on the planet, as I said, for many years. And acquired it on that basis, and as you'll know from the market alert, already have many positions in this for that very reason. And it's interesting that the stock market and silver are soaring as well, because normally they would be opposites. The fact that the dollar is dumping as well is also a positive for the precious metals, which will continue to move higher as the madness that is the Federal Reserve continue to print money as well. Now let's have a quick review and see where we are, because I've been away, went away on Friday, back last night. So what I want to do today, instead of going through the detail of the trades of Friday and yesterday, the German DAX on the electronic and the Dow, as it was holidays all round, I'm just going to let's just play catch up and get a feel for where we are for today's trading. That's the most important thing. So let's start off by having a look at, it doesn't matter which one, we'll start off with the Dow. You can see this is the daily chart, and yesterday prices were lower, closing below the 5-bar moving average for the first time in 6 trading days, 7 trading days there. So overnight trying to get back above this at the moment. So the Dow moving higher there. Let's have a quick look inside of yesterday just to see what happened. And you can see that the Dow sold off yesterday. Let me just bring this to the right place. There we go. So you can see the Dow selling off straight from the open until we had the buying come down to the S2. That would be there. Again, trying to find support at the low. You can see how important these levels are, but straight through, eventually succumbing to the selling pressure and then finding support, trying to get back. But overnight prices, or just before the overnight, before the first part of the overnight, the market was sold into, again, down to towards the previous day's low when they opened up, and then prices have rallied. So in the 5 minutes Dow, you can see prices are just back above the 200 MA, heading towards the DP. Let's have a look at the DAX, and a similar thing there yesterday. The market closing below the 5-bar moving average for the second day, but stopping at the 20-bar moving average in the daily chart. Prices reversing on the overnight and attempting to get back above the the 5-bar moving average there. So let's have a look from this low to this high on the fib retracement, see where we are. And you can see the market trading down to 62%. Well, it certainly came back to 50% then. So let's just do something here. If I can go to settings and inside of fib retracements, I'm just going to add in the 50, click apply and save this. And if I apply this again now from the low of this bar to the recent high, you'll see the market stopping between 50 and 62% there. So prices bouncing off this and could head back to the upside. I'm going to remove this 89%. We've got the recent high at 13,318, which comes back to here. We can see the selling there. So when and if prices approach this level, then we can expect to see some selling. However, all along the way here, we've got all of these highs to take out as well from the last 4 days, which need to be removed. So what I'm going to do now is to see if any of these coincide with any fibs drawn from this high to yesterday's low. So I'm just going to click on the low of this bar down to the low of this bar and then project this back. So immediately I can see that the 50% retracement is tying in with the 5-bar moving average, and then as we move up towards the 89%. This also is tying in with the high of the selling that took place in this bar as well. Overnight for the German DAX, similar thing. Again, you can see towards the Dow close, and then 11 p.m. down at the bottom there. You can see when we switch to the overnight, because the pivot points get redrawn, and you can see their prices making their move back, managing to get back above the 200 MA. And again, you can see it required a bit of volume to drive through this on the electronic market, then trading up to the DP level, which has now become support. So it looks like either in the futures market at 7 a.m. or at 8 a.m. in the cash, prices could be moved to the upside. So let me just compress this a bit more and have a look and see where we are. As we would expect, if we're at the daily pivot, we're midway between both lots of pivots for the high and the low. And again, you can see that we've got potential to the upside of 100 points, and the same to the downside 100 as well, where prices are currently trading in relation to where their high and low was for yesterday. So let's wait and see what happens with regards to this. Let's have a look at the news yesterday. The market's bank holiday for the UK. Tuesday, which is today, which always throws us out when there's a bank holiday. We've got ISM manufacturing. We've got non-farm payroll this week. Get my teeth in. And that's the preliminary one is tomorrow, the ADP non-farm change. And then Thursday, Bank of England governors out, news from the US. And then Friday is the non-farm. That will be out as well. And then, of course, you've got the claims on Thursday as well, which again is still forecasting another 965,000 job losses and new claims. So it's going to be interesting to see what happens. Certainly on Friday, another 1.5 million job losses. It's just dire, isn't it? But you wouldn't think so to look at the stock market as it continues to move to the upside. So let's have a look at some other news. Yesterday, the VIX jumped. That's the volatility index jumped higher. Stocks dumped at the open, which we've just seen, and retail traders face platform outages. Interesting, this, spoken about this before, only retail traders faced outages. So as the pros were able to get out yesterday, the retail traders, i.e. us, we're having problems. The Robinhood and TD Ameritrade users are having problems, which obviously got resolved. But as I've said before, what this is blatant manipulation. Again, just make it easier for the pros to get out before anybody else. And this might be the weirdest market I've ever seen, charting the market's descent into insanity. Like some combustible combo of musical chairs, Russian roulette, and five-finger fillet. Absolutely. I've said it for a long time, but the insanity continues. And once it does go, it's going to be fascinating, but not for a while. Markowski, probability of V-shaped recovery is very low. Well, you don't have to be a genius for that one once furlough payments discontinue and come to an end in the UK. And also the... what was the one that we've had recently? I never took advantage of it. Eat out to whatever it was. That's ended now as well. So we'll start to see the real impact of the lockdown start to take shape over the next month or two. That's for sure. And then the implied volatility also picking up, as we saw with the news there, the VIX spiking. So did the implied yesterday. You just zoom in on this, make it a bit easier to see. So we've got up to 21.95, which is consistent with potential correction before we could actually go back to the highs as well. So even though the markets are attempting to move higher, if they make it up to today's highs, they can certainly reverse very quickly. Or to yesterday's highs, I should say, can reverse very quickly and then make their way back down as well. say with the, I think it was the Dow, wasn't it, that had closed below the 5-bar moving average, and the DAX for 2 days, the Dow for 1 day. Again, there's nothing wrong with coming back and retesting that as well. And the color-coded version is amber. That's because the implied volatility is closing above the 20-bar moving average, the black line, but prices haven't closed below the 20-bar in the underlying market yet. And then finally, we'll have a quick look at the metals markets, but it's interesting to see now that 16 billion Ohio Police and Fire Pension Fund approves a 5% allocation for gold. So as Buffett's move into gold and precious metals have opened the door for fund managers to follow suit, except instead of playing in a $100 trillion equity market, they are dealing with barely $1 trillion in investable gold. Look out above us, absolutely, as the market and precious metals become thinly available. Supply is certainly becoming less, as I've shown in videos in the road, the end of the financial road. But I managed to find some physical silver yesterday for somebody who wanted some. But yeah, it's certainly becoming interesting. So let's have a look and see what's happening with the dollar and also in the precious metals. So let's start off with the precious metals. This is the daily chart. You can see how they bought back in at the 20-bar moving average a few weeks ago when they dropped the price down and managed to slam it down to $24, and now we're back at $28.79, heading back to $29 per ounce, which I think is actually been hit this morning or on the overnight. No, $28.81 is the actual price, which you can see there. In the monthly chart, very interesting picture as well, because we've got a selling pressure for silver. I've not seen that for years. This selling pressure at the 62-78% retracement there at the 28,374 level. But now, if the selling's out of the way, the September contract rolls over to December. We're free to continue higher, and the next upside target is going to be the $30 per ounce. And what's assisting this is the US dollar, if I can find it, which will be in here. Go into the daily chart, and you will see that we have once again broken the lows, which I've had marked up at 92.105, and we're below this on the overnight as well. Just make sure that that is correct. Yeah, 1st of September. And you look at the monthly chart, we've got a long way to go, and so has the price of gold and silver, as the precious metals are inversely related to the US dollar, and the devaluation of the final currency, as the fiat currencies continue to be devalued, you will see the market trade to 87.94 with no problems at all. The 200 MA will be very interesting if that is taken out. So yeah, there you go, and the positions continue to grow, as you can see there in the silver, and I'll just keep buying these as the market pulls back. Okay, that will do it for this one. Let's see what happens today as the markets get back to normal, schools reopen, and everybody should see a bit of normality, not in the obviously as it was, but hopefully the volatility will remain as it is as well. Be great. Okay, thanks for watching. See you in the next one.